Hi, my name is Randy Flood, and I'm Colorado's only certified mortgage coach, and I provide mortgage advice that everyone can count on. Today, I have a special alert for you for a Colorado mortgage and home loan rate update. And today is Wednesday, the 30th of May, and the special alert is rates are at all-time lows. And why is that happening? The 10, 7, and 5-year bonds hit all-time lows, and once again, it's primarily due to the problems in Europe, especially with Greece. Also, the 10-year note yield has fallen 9 straight weeks in a row. That's the longest streak since 1998. If you recall back then, there were problems with Asia with the currency. Russia was also defaulting on their debt, and we had some domestic problems here. Now, in the U.S., we're a safe haven right now with everything else going on globally. And what has also happened is the Fed bought up a lot of the bonds through their quantitative easing 1 and 2. So the law of supply and demand is in effect right now. There's fewer bonds, and that's also increased the price. And once again, the Fed, there's a lot of fear and uncertainty, and that has pushed the premium at the highest level at a negative 0.85%. And of course, the economy is still struggling. I prepared this slide over a month ago because back in October 2010, that's when rates hit the all-time low. And you'll be able to see we keep on hitting all new lows, and it sounds like a broken record. But what happens is since April the 11th of 2011, we've been on a positive trend. So that is improving the rates. Now I want to give you a live view, and this is what's actually on my monitor throughout the day. And anytime when you see green, that's positive. That means rates are improving. And here it is a month out. But when we take a look at the max chart, once again, if you compare this to what I just showed you a second ago, we are again at all new time lows, or highs, I should say, which is all-time lows for us. And that's fantastic. Also want to show you one other thing with Rate Watch that I use. I'm able to go on and see what's happening with all the different lenders. And what I wanted to point out is today the yield spread increased by 0.201, and I'll explain that in a second. So what does that 0.201 mean to you? For example, if you have a loan amount of $250,000, just that increase in premium yield spread would net you $502.50, which you can use for your closing costs. And that's quite a bit, and that's just in one day. And that's the reason I monitor the rates for my clients, because it's important to know what's going on in the market, where the market is headed, and also when to lock. Speaking of locking, Rate Alert, their recommendation is to lock if you're closing within 7 days, and get to go on and float if it's beyond that. And Rate Lock Advisory is basically the same thing. And I would have to agree, you have to monitor the rates, how they're going, because I think they're still going to slightly improve. And I cannot let this opportunity to go by to also mention, once again, on the 11th of June, FHA is making their mortgage insurance premium significantly lower, and that's for the group of individuals that got loans before 1 June 2009. And this is a huge, huge gift for everybody wanting to refinance and couldn't because of the increased mortgage insurance premiums from before. So, go on and give me a call, and I can explain more of that. I hope you found this information to be valuable. You can always give me a call at 303-521-9550, and you can also email me at rflood101@comcast.net, and I'm available 24/7. If you liked what you saw here today, please comment below and share it, and with your friends, co-workers, and everybody else, because they need to have this vital information as well. And as always, only wanting the best for you. Take care.